Hello, everyone. Today is Tuesday, October 5th, 2021. I am Ashley Wilkin, Senior Wealth Manager with the Rice Partnership, and I have Orest Saikevych here, our Chief Investment Officer. Hi, Orest.
Hi, Ashley. Hello, everyone.
So last month we talked mostly about equities. This month I wanted to see if we could talk about fixed income. So could you give us a quick outlook on what's going on with the fixed income market today?
Okay. We look for fixed income prices to trend lower uh, in the foreseeable future, and that means that the yields overall are going to rise, especially on the longer end, the 10-year Treasury up to 30-year Treasuries. And the main reason for that is because of inflation. Inflation has been picking up, due in part to the fact that the economy's come back, and also because of some particular issues like supply chain issues, etc. So the long end yields are going up, and we think they're going to continue to rise. The short end depends on the Fed, and the Fed is signaled that they'll probably start tapering from a lot of the quantitative easing programs they've had, probably in December. And that means at some point next year, maybe late next year at this point, it seems, the Fed funds rate, which is the rate they charge on short-term borrowings, is going to go up from 0.25% where it is higher. That overall timetable, as far as the taper and the Fed funds rate, has been pushed forward. It was originally thought that tapering was not going to start until mid to late 2022, and that actual increases in short-term rates wouldn't start until maybe 23 or maybe even 2024.
Okay, great. Are you recommending that clients hold cash as an alternative to fixed income? And what are some of the pros and cons of holding cash or money market in a portfolio today?
Okay. When we talk about cash, of course, we're talking about cash or cash equivalents, which we include as money market funds. The risk, of course, that everyone knows, with rates so low, money markets basically don't yield much at all. Okay, and if the yields stay low on the short end, then the money market funds will not continue to not earn much. However, if at some point the Fed does start raising the Fed funds rate, yields will go up, and benefits of holding a money market type fund is that it will be a good diversifier in a portfolio. The principal will not go down. The principal is stable, and it's very important because if bond prices go down with the yields going up, stock prices might very well fall also. So they may be correlated together, go down together. So it's good to have a stabilizer, a diversifier in a portfolio, which is why we think there are definite benefits at this point in the economic cycle and in the interest rate cycle to hold cash equivalents such as money market funds. And also, keep in mind, it's not, we don't have our feet set in concrete. After rates do go up, we can switch out of those funds and invest more on a longer term basis and try to lock in those higher yields. So those are, that's the risk and the benefits for holding cash type equivalents like money market funds.
Okay, thank you, Orest. We appreciate your insight as always and look forward to next month's update. Have a good day.
Thank you very much. Take care, everyone.